Hello everyone, welcome to my channel Finance with Maqsudur Rahman, and today I'm going to show you the ratio analysis between PepsiCo and the company Coca-Cola. So let's not wait and jump into the ratio analysis. So you can see the website. This website is one of the US government website where they upload the financial data of the companies. So I'm looking for the data for the PepsiCo, and here you go. So and I will drop the link on the video description from where you can download the data financial. So here you can see the income statement I'm downloading from here. So simply just drag it and just copy it and paste it to your Excel file. So here you go. So here you can see the financial statement, actually the income statement you can see. And now what I'm going to do, I'm going to download the balance sheet of the interactive year 2022 and 2023. So here you go, just copy it and simply paste it on your Excel file. Here you go, just paste it. Yep. So now you can see I have the raw data on my Excel file, and now I'm going to put the year on it. So 2023, 2022 and 2021, and now I'm going to bold the data. Yep. And I'm going to change the font here as well. So just trying to make the financial statement a bit beautiful, so I'm just making some color on it, and just simply just change the currency into US dollar, because the data I have downloaded from the website is in US dollar, but here the data are in number, so I have to convert it into dollars. Yep, that's it. So I'm going to adjust the cell size to make it much more beautiful, and here you go. Finally I'm going to make a box so it can separate the data from the other data. Now I'm going to jump on the balance sheet. Here you can see the balance sheet, everything are here are given on million. So let me sort out the data first. Let me back yeah, just I made the box here now, and color it as well. No, just before change the font. Yeah, just make it 12, and here you go, and make it color coded. Yeah. So I'm going to sort out the cell. Just make it 12 and just change it to the currency USD. So you have seen how I have downloaded the data of the PepsiCo from the US government website. Now I'm going to so I have done the same methodology to download the data from the US government website, and here's the data of the Coca-Cola company, and I have sorted out the data already to make the video a bit smaller. So now you can see on the right hand side I have put the ratio of these companies. So this is the headline of the ratio, so I'm going to do the ratio analysis of these two companies. So here you go. The first I have to do the liquidity ratios. So what does liquidity ratio define? Liquidity ratio defines how liquid cash a company has to pay up its debt. So now I'm going to do, so the simply the current ratio of the first current ratio, which is the first part of the liquidity ratio, is simply the current asset divided by the current liabilities. uh, So here you can see of the year 2023 and year 2022 the liquidity ratio, which is 0.85 for 2023 and 0.80 for year 2022. So here you can see, so we are quite done with our current ratio, and now we are going to do the asset ratio. Now the acid test ratio. So here the acid test ratio would be simply the current asset minus the inventories divided by the current liabilities. This acid test ratio measures a company's ability to pay off its short-term liabilities with quick assets. So let's do it. So for the year 2023 it's 0.68. Okay, let me drag the data to the left hand side. So just simply copy and paste the formula to the right hand side, and here you go, we found the acid test ratio is 0.609 for the year 2022. Now jump onto the cash ratio. So cash ratio is the cash and cash equivalent divided by the current liabilities. So it's simply, I need to sum up the cash and cash equivalent and the short-term investment from the balance sheet. So let's put the sum formula and just sum up. So what does cash ratio define? The operating cash flow. This cash ratio measures a company's ability to pay off its short-term liabilities with cash and cash equivalents. So cash ratio is quite crucial for a company, and it measures its ability to quickly pay off its short-term debt. So these three of them measures the ability of a company to pay off its short-term debt. Cash ratio defines how quickly, and asset ratio defined less quickly, current ratio defined less quickly. So simply summing up that cash equivalent and just divide it by the current liabilities. Yeah, here we go, we found the cash ratio. You can see 0.6578 for the year 2023 and 0.57 for the year 2022. So let's jump on the leverage ratio. So the leverage ratio usually define the amount of capital that comes from debt. In other words, leverage financial ratio are used to evaluate the company's debt level. So the first ratio of the leverage ratio is the debt ratio. The formula of the debt ratio is total liabilities divided by the total asset. So here you go. So we can see PepsiCo is highly debt company. The 81% of the total finance came from the debt, and it was same in the year 2022 as well. So no change on debt. So next come to the debt. Next come to the point. It is debt to equity ratio. So simply it would be total liabilities divided by the shareholders equity. Here you go, just drag it to the right hand side to find the previous year 2022. So here you can see debt is 4 times higher than the equity, more than 4 times. Now the interest coverage ratio, it would be simply the operating profit divided by the interest expense. So it defines how many times the company can pay off its interest using its operating income. So operating income is basically the income before tax and depreciation and the other cost. So just ignore this minus sign here. It defines 40 times it can pay the debt, the interest of the debt using its operating income. Now let's jump on to the efficiency ratio. Efficiency ratio defines how efficiently the company using its assets to generate sale. So asset turnover ratio should be, the formula is net sales divided by the average total assets. So I have to average the two total asset of the year 2023 and 2022, and net sales should be divided by this average two assets. Yeah, here you go. See, we can see that 23 times the sales generate over the asset. So here we don't have the asset of 2021. So as a proxy, we can take the asset, that average of the previous year, like the average of 2023 and 2022. So as we don't have the data, we are just taking it proxy. But if you have time, then you can take the data of the asset from the previous year from the income statement. But I'm just showing it for the learning purpose. Here you go. Here we found our asset turnover ratio. Now inventory turnover ratio should be the cost of goods sold divided by the average inventory. And I will follow the same methodology because I don't have the inventory for the year 2021. So I'm going to take the 2023 one and 2022 one as proxy to find the average. Now I have to find the days inventory. It should be 365 divided by the inventory turnover ratio. So the days of year divided by the inventory turnover will simply give us the days in inventory in hand. Now we'll move to the profitability ratio. So it defines how profitable is the company. So simply the gross margin. So we have to divide everything like with the sale. So gross margin, so the gross profit divided by sales, operating margin, operating profit divided by sale, return on asset, simply the net income divided by total asset, and return on equity should be net income divided by shareholders equity. Here you go, we found 4 of these formula and the answer. So now what I'm going to do, wait a second. simply drag the formula to the right hand side and paste it. That's it. It will give us the return the profitability ratios of the year 2022. Now I'll turn into percentage. So now the market value ratios should be, so earning per share is already given on the income statement. So take the basic one. And then simply paste it. Now for the price equity ratio, we have to get the data, the price of the end of the year 2023 and 2022. So simply PepsiCo price, and just to get the price of of that date, the end of the year 2023. From there, yeah, simply get the price 180 price and divided by the earning per share, which is given 6.59, which will let me put the equal sign, yeah, and that's it. It gives us the PE ratio. The lower it is, the better it is. And simply the price of 2022 is 173. Here you go. Here you go. We are quite done with our ratio analysis of the PepsiCo company, and now we are going to do our ratio analysis for the company Coca-Cola. Here we will follow the same methodology we followed for the PepsiCo company, doing all the ratio analysis of the Coca-Cola. So I have already input the ratio headline here. So let's begin with the Coca-Cola. So let's do the current ratio. Current ratio would be simply the current asset divided by the current liability. Here you go. Now the asset ratio would be simply the current asset minus inventories divided by the current liabilities. Here you go. It's 0.94 something, and for the year 2022 it was 0.90. So now we're going to do the cash ratio. We'll simply follow the same old formula, cash and cash equivalent divided by the current liabilities. So we'll sum up the cash and cash equivalent securities such as marketable securities and receivable and the cash equivalent. I need to put a bracket here, remove the last one. Here you go, it's 0.85. Simply drag the formula bar to find the cash ratio of the year 2022. Now we are going to find the leverage ratios here. So leverage ratio is simply the debt ratio. The debt ratio would be simply the total liabilities divided by the total asset. As I mentioned before, leverage ratio is quite crucial. How much leverage a company is, it defines, so it will give a glimpse that how much debt a company has and how much like default possibilities a company has as well. So here we found our leverage, the debt ratio, and we simply dragged it, and debt to equity ratio should be simply total liabilities divided by the shareholder equity. So here you go, we found our debt to equity ratio is less debt, like Coca-Cola has less debt than the PepsiCo. So PepsiCo was like around like 4 something, so 4 times more debt, and here Coca-Cola has like 2.5. So leverage ratio, it seems like better for Coca-Cola than PepsiCo. So the interest coverage ratio should be operating income divided by the interest expense. Here you go, we found the interest coverage ratio. Now efficiency ratio we have to do. So asset turnover ratios should be net sales divided by the average asset. So average, we have to make the asset average, and we'll follow the same methodology that we followed for PepsiCo. Take the average, proxy average of 2023 and 2022 for the average of 2022, because we don't have the data of the 2021. So I'll change the cell to D. Or it should be point. Wait a sec. No, something happened here. Let me check. Okay, I'll have a look later on. For now, just carry on with the ratio of 2023 first, and then I'll have a look. So inventory turnover ratio should be the cost of goods sold divided by the average inventory. Oh, I found the mistake here. So it should be 0.5 here for the asset turnover ratio. So days inventory sale divided 365 should be 365 divided by the inventory turnover ratio. So here you go. So 341 days inventory in hand. Now the profitability ratio gross margin we got 0.59, so which is quite good, and the operating margin simply the operating profit divided by the sale, and return on asset um, should be the net income divided by the total asset, and we will follow up the same for the return on equity. Net income divided by the total equity. Here you go. I think I need to sort out the data, because as I've downloaded the raw data from the 2022, that one, the US government, so I need to format the data to just the value, because that's why it's not giving me the next year data. So I need to transfer it to just the value to get the data which would be workable. All right, let's sort it out. So here I have sorted the data, just make it just the value, and now I think it should let me transfer my cell, like copy and paste my cell. Yeah, here you go, the profitability ratio, and now I'm going to do the earning per share. So it's already given, so simply copy and paste it to my ratio analysis cell. And the P ratio, I'll follow the same methodology. I'll get the price from the website, from the Google that what price it was during 2023 and 2022, and simply divide it by the earning ratio to give me the price divided by price and equity ratio, price and earning ratio, P ratio. There you go, we got into Coca-Cola. Now just click on the 5 year and now get the data of 2023, which is 63.61 USD. So simply divide the price with the earning per share ratio and follow the same methodology. It's 59.21. Here you go. Now I'll simply drag the formula to get the interest coverage, because as I have sorted out the data, so dragging the formula bar should be fine now. So here you go. So here we are quite done with our ratio analysis of the Coca-Cola company. So we are done with both of the companies, both PepsiCo and Coca-Cola. The ratio analysis has been done, and now we are going to put the year. I didn't do it before, so let me do it. So I work on the data now. Time to make the data much more organized, so we can put it on the report or whatever we're going to do. Just make it much more polished. Here I've done some trend analysis, so I'll show you for all the data how I have done it, so it would be easier for you to do. So now just insert some sparkline, which will give us a glimpse like which ways the company's performance is going. So line, so first need to select the data. No, sorry. First need to select the data on which I want to do my analysis. There's something going wrong. Oh, okay, I need to select the data for the first table. Okay, this one should be the data on which I need to do the analysis, and this one I need to choose the data on which I want my result. I need to select 3 of the cell, just enter. Let me try it again, something going wrong. So sparkline, lines, select data, this one, and then think I need to select 3 of the table. Yeah, should be fine now. Yeah, here we go. So we found the leverage ratios. So it's showing us the trend. It is going which way. So now we'll follow the same methodology for the efficiency ratio, both profitability ratio and the market value. Here you go, we got the spark line for the profitability ratio, and now finally the market value ratios. Here you go, select the data and then select the output cell. Here you go. So here we are done with our Coca-Cola uh, trend analysis, and now the trend analysis we are going to do for the PepsiCo company. So select line, here you go, we got the trend. Now the spark line for the leverage ratio, and select the output line. Same, the follow the same methodology. So we are going to do the rest of the data. And finally we got left with profitability ratios and the market value ratios. Here you go, and the final bit, the market value ratio. Here you go, we finished with this spark line. So now I'm going to show you how you can input the data of PepsiCo and Coca-Cola on a single graph. To do that, let me first copy the year. Now I'm going to copy the data of these two company and make the graph. I need to pass the values only. Here you go, and then need the data of Coca-Cola company, the current ratio. So I'm going to make the graph for only the current ratio because I just want you to know how you're gonna build the graph and make your data table, which you can use on Microsoft Word file and write a report. So just need to select the data first and then insert line graph. Here you go, we got our line graph here. So here we can make the comparison between the two company, which company is actually doing well in terms of ratio analysis, and we can come up with a conclusion. So we can do the same for all the ratios we have done, and we can make our ratio analysis based on this data and come up with the conclusion that which company is actually doing better and which company share we should buy, and which company actually we should choose to invest our money. So this is how we can do the ratio analysis of any company and make graph and come up with the conclusion. And you can use the same ratio analysis technique that I have showed you here to make a report or like assignment at university. So you can like do your ratio analysis and make build a report and submit it to your professor, and I hope you will end up with a good grade. So this is it. I think I'm done with the ratio analysis, so I will come up with my second video very soon with another financial model. So hope to see you soon, guys.